What's happening, everybody? Welcome back to my channel. I hope that this lesson here today is going to really help you to elevate your trading and really identify some of the small factors that you may miss as a technical trader. I'm going to go over my trade that I took on gold today, and I hope, as I said, this really helps you. As I always ask, if you're enjoying the content, please like, subscribe if you haven't, and turn on notifications. I put out a poll this morning to my members to ask if they thought gold was going to go down at this point, or if gold was going to go up. Now, some of them said up, some of them said down, and I'm going to break this down to everybody so you can identify this. What we see on this market structure before I took the trade was this price action here. What we can clearly see with this market structure is that price has previously come to a major level in the market on 3 occasions. On these 3 occasions here, price has attempted to break to the upside and failed. Now, this is indicating significant bearish pressure on this market. Not only is the taps on this key level showing significant bearish pressure, but we have a structural level here in the market that was smashed and broken by this one candle. And then we had a further break of another structure with this 1 4-hour candle. This is signifying strong bearish pressure, indicating that price potentially is going to go down. Now, the key levels that we're going to be mindful of is these levels in and around here, because now, as you can clearly see, price is trapped within this range. Once price pushes back down to this key level, we have an exhaustion phase on this market. Now, especially when you see around 12 hours worth of information indicating wicks that price may continue to push down, what we're expecting is a lower low formation. As you can clearly see, we never got that lower low formation. So when I identified that this morning, what I recognized is that this was a major level in the market where price was failing to break above for 12 hours. We finally had the bullish pressure in this market. We then had what was potentially a lower high, indicating a structural high, lower high formation, and 12 hours worth of information, wicks worth of information. Price never made the lower low. So now this is starting to suggest to me some sort of bullish pressure. When I continue to analyze this market, I recognize a lot of pressure from the downside, indicating that the bulls may be stepping into the markets. I then continue to recognize that this is a structural low on this market, and this is the higher low on this market. Now, this doesn't necessarily mean the market's going to go up, because this is the key level where we expect price to react from. As long as price trades below this level, then technically we may be stepping into another range. But what eventually happened? This 1 4-hour candle here indicated strong bullish pressure and was finally able to break and close above this structure. Immediately when this happened, this was evidence to me that the bulls were in control at this moment in time. That doesn't mean I'm going to predict that the market's going to come up here. That just identifies to me that the bulls are in control. So when I'm looking at this structure, I'm looking for buys only. The next thing I done was dropped in my key level in this market. And when we drop down to our lower time frames, this will start to become a lot clearer for you. The hourly time frame for me is my behavioral time frame. So when I'm looking at the structure of this market, what I can clearly see is price action clearly breaking and closing above structure. What I need to see is price push, exhaust to a key level, looking for a tap and a double bottom, and then I'm looking to take my buy. Right now, this has not happened. What I'm waiting for is for price to do whatever it needs to do and then indicate that structure that I'm looking for. So now this becomes my structural low, my higher low, my structural higher high, and now my new higher high formation. And this now looks to me like a key area where we have the rejection wicks. So now my final responsibility is to scale down to my 15-minute time frame to see if we can get that double bottom. Now let's remove this to clear this up. We have everything lined up. The 4-hour time frame has indicated a break close above structure. We now have price creating a structural level where I'm looking for my double bottom. And now all I'm simply waiting for is for price action to get back to this level to indicate a potential buy opportunity. So let's continue to see what happens. This is the 15-minute time frame, which is my entry time frame. Price action continues to push up. So at this moment in time, I'm not worried. I'm not planning to rush into this trade. I'm only planning to enter this trade if price gets back to that level that I need it to get back to. So now we're starting to see bearish sentiment in this market, which is completely fine. But remember, this structure does not change. My bias is still buyers at my key level. Price continues to push back to that key level, and immediately we have 3 touches. This, to me, is evidence of continued bull pressure. So let's line this up. We had a strong rejection zone on the 4-hour time frame. Price attempted to push back up to make a higher high and failed. Price then came back to that level to indicate strong bullish pressure. Eventually, price action came back to that key level and failed to break it for around 16 hours. Eventually, we had a break close above that structure. So now it's time for me to get down to my 1-hour time frame to see what's happening. Price then illustrated a break close above that structure, a new higher high, and then a level in the market where price is reacting to. So what did I do? Once I saw the wicks, I decided to take that area as my key level. Finally, I come down to my 15-minute time frame to identify the hourly level, the break above the 4H level, and now the retest of this level. I'm now just looking for my confirmation to enter this trade. The next candle gave me this information, a strong, bullish, engulfing candle to the upside. Now, this is not why I'm trading it. I'm trading it because I gathered all the information collectively, found confluence in why I'm taking this trade, and now I'm going to take it. So I took the buy immediately after the close of this candle. My entry on this pair was at 1489.7. My stop loss on this trade was at 1494.7. And my take profit on this pair was at 1487.2. So it was a 50 pip target with a 25 pip stop loss. So my risk to reward ratio on this trade was 1-2. Now, I'm usually a 1-3 risk to reward ratio trader, but when I take buys, I like to take 1-2. The reason for that is I'm not very confident taking buys. I'm a sell bias trader. My eyes see them much, much better. But on this occasion, I was very, very happy to take the trade and decided to have a much safer stop loss, well below the previous structures, and a nice 1-2 risk to reward ratio. So this is how the trade played out. Immediately after entering the trade, price action continued to push up. Very satisfied with that. Now, once price action started to push up at this stage, I decided to close my stop loss to around half. This meant now that my risk went from being 2% risk to only 1% risk. The reason why, I'm going to continually trail this in until I hit take profit, because I don't care if I hit take profit. I know if I trade consistently, systematically, and follow my plan, eventually my wins are going to outdo my losses. But as long as I manage my risk. So now my stop loss is at half. I'm only at risk of 1% on this trade. Price action continued to stall a bit. And then once price got to in and around this level here, I decided to take 50% off of this trade. Once that happened, I trailed my stop loss into profits. Now I'm sitting very comfortably. 50% profits taken off. I'm only around, let's say, 30% away from my take profit, if that. And now my break even has been put into profits. So we'll continue to see what happens. Price action then eventually pushed to the upside. Now, I didn't actually hit take profit immediately. What happened on this trade is price started to stall in and around this area. I took another 25% off of this trade. That means I already banked 75% on this trade, and then it was just a matter of time before my take profit was hit. That was the trade on gold. Pretty simple analysis. As I said, you may not understand everything immediately, but if you get the gist of how I built this trade up using Confluence from a 4-hour time frame to my behavioral time frame, which is the 1 hour, to then my entry time frame, which is the 15 minutes, you'll be able to see how you can do it yourself using whatever strategy or approach you use for the markets. Market structure is market structure, period. This is exactly how I took the gold trade. I hope this was useful and you could take something away from it. As I said, guys, please like, subscribe, and turn on notifications. Until the next video, take care. Bye-bye.